Hello there, traders. Welcome to today's live stream. It is Thursday, the 10th of April. My name is John, Senior Market Analyst. We're going to be going through some charts of interest as well as some other opportunities in the market. Obviously, we've got to talk about the data that's recently come out. We've got to talk about sort of what happened yesterday, I guess, which was something that completely turned the market around, making it very difficult trading conditions at the moment, especially when it comes to kind of trying to eye up, swing trading opportunities. I must say, swing trading has been very difficult over the past week or so. I was Aussie yen short, and thanks to Mr. Donald Trump, that short didn't last very long. So we'll talk a little bit about that going into today. I have taken a couple of other positions as well. I'm currently Euro CAD long. I have just placed a silver position long, and I am also oil short. So I've actually got 3 positions running now. So I'm going to take you through all of those in a little bit. But ultimately, we're going to discuss the elephant in the room first, which is obviously Donald Trump and tariffs. Like I said, I was short Aussie yen, basically off of this break in structure here. Okay, so we had this kind of nice little upward trend. We had this lovely double top pattern and a break of that double top. I entered short on that hourly close, and then basically put my stop loss above these swing highs here, actually. So I actually had quite a decent size stop on it, just because I wanted to give it more flexibility because of the volatility in the market. And I had my target down towards these kind of like 82s or whatever, thinking that we were going to see kind of a progression to the downside. So yeah, that was my trade. I actually managed to exit this a little bit sooner, so I didn't take a full loss in the end on this. I actually exited as we were breaking these highs because the market just shot up and it was going. I obviously felt that at that moment something was going on fundamentally, or something shocking was going on. So I didn't want to hold through that. Obviously, it set up. If it would have set up again, I would have took a position, but it didn't, and the market continued higher. So that was my loss on Aussie yen, and I'll go through my current positions in a little bit. But I'm still monitoring this. Obviously, we've had some details out recently about Donald Trump and tariffs and things like that. So we've also had CPI data come out as well, which fell to minus 0.1%, which is quite significant in the market. If I just go over here, we have a little look at the US data. We saw core CPI print coming in at 0.1, and we saw CPI coming in at minus 0.1, and CPI year on year down to 2.4. So that's relatively bearish US dollars. If we look at the kind of impact that has had, we can see we're down 1.11% on the day. Dollar is continuing that sort of drive to the downside currently. Euro dollar in particular rallying quite significantly at the moment, because that is bearish US dollars, as it means that the Fed are more likely to cut interest rates. So who have we got in today? Eugene, I saw this message before I even got online, so I don't know whether you came in and joined very, very early and you couldn't hear anything, or the stream wasn't live at that point. So yeah, hopefully you can hear everything now. Hi Dan, hope you're well. Ratish, welcome. Hope you are both doing very well today. Let me know how trading's been for you guys, because it's been a whirlwind for me this week. Let's face it, right? What has happened in the market? And all you have to do is Google one name, right? And it's Donald Trump. Go to news, and actually, you know what I'm going to do? Let's see if I can get to... Oh, it's the BBC. That was it. So this is what I was kind of reading through yesterday, and this was the situation with Donald Trump, kind of like what happened, you know, or what has happened. And I mean, this is a nice little bit of a timeline that we've had, you know, 20th of January. So this is where I talk about the narrative as well. You know, when did the kind of narrative really start? And it was way before he got inaugurated, but at the same time, you know, he came into the White House on the 20th of January, you know, outlining plans on introducing tariffs. And we just kind of continued until yesterday. So yesterday we had a really significant change in the market. So all this time it's been applying tariffs, even sort of Liberation Day, right, which was this kind of 2nd of April, where he announced reciprocal tariffs on certain countries, as well as the 10% levy on imports from all of the countries. And yeah, you know, what he did on yesterday was something that I really did not expect. I expected somebody to hold out fairly firm, considering the type of character Donald Trump is. But did he get pressure from the bond market? That was one thing that we have to consider. The bond market was tanking. And when I say the bond market, if you don't know what the bond market is, it's just US Treasury bonds, right? This is the bond market. Now it's considerably up from where it was, right? You know, considerably higher. And Trump wants a higher bond, right? Because higher bonds means that the yield is lower on those bonds, right? So that's what Donald Trump ultimately wants. He wants lower bond yields. The reason why he wants that is because government debt, or the way they have to pay their government debt, would be cheaper if yields were lower. It's as simple as that. That's what he wants. He wants to pay America's debt back for less, essentially. So what happens when yields drive lower is we usually see a weaker US dollar, and that's what I'm kind of continuing to look for in the market. I'm looking for a weaker dollar. However, what we had was when Trump announced those sort of tariffs, right? So this was the reciprocal tariff day on the 2nd of April. All right, let's see if we can map this out just a little bit while we talk about this. Let me just see if I can get some kind of text bubble. Let's see if this works. 2nd of April. Okay, brilliant. Right, so this one was, whoops, this was Liberation Day, right? Okay, that was Liberation Day. That was where he announced those tariffs, and we actually saw bonds move higher, right? That's exactly what he wanted to see. He wanted to see bonds move higher. So it drives that bond yield down because they work in opposites, okay? So that's what he wanted to try and do. However, he wasn't too successful. Let me just make this a little bit bigger because I can just see on the stream that it's not that visible. Let's see if we can turn the text. We'll turn the text like this, and we'll turn the label background dark so you can see that. Line color. Can make that any thicker? No, but hopefully you can see that on the screen, right? No worries, Eugene. Ratish not being trading, that's absolutely fine. That's great. Good to be cash. Hi, Al. Hope you're doing well. So, yeah, you know, Liberation Day came around, and this is what we're looking at on the 10-year at the moment. Let's see if I can grab one of those again. So, obviously, we had the situation then where China retaliated, okay? China retaliation, okay, which is around about the 7th, okay, and we saw bonds sell off. Now, why did bonds sell off? Well, China ultimately forced this issue here because China basically dumped US bonds, right? Because a lot of the debt across the world has to be paid back in US dollars. So they basically dumped bonds, right? And that's what's driven these kind of huge moves in the bond market. And that's where I think Trump has come under pressure, because they've realized that China has the power to just basically dump bonds into the market, which is going to drive treasury yields higher, which means that the US government debt essentially is going to cost a lot more to pay back, right? So there's kind of China's, retaliation going on here. And then we have obviously what happened, yesterday, which essentially was Trump pauses. I'm just going to put the Trump pauses reciprocal tariffs. Okay. But bonds still ended up selling off, right? Initially, we did get a little bit of a sort of spike higher in these bonds, right, around the time. So we had a little bit of upside in the bonds, but ultimately they still kind of closed a little bit lower. And you can see that here on this daily chart that we had on the futures market, that we saw this kind of downside going on. Okay, so really speaking, bonds have just been sort of breaking lower. Again, you can see this a little bit better as well on the bond yields as well, where you can see this real aggressive spike higher. Now, typically higher bond yields means higher US dollar prices. I actually did a video on this yesterday, great timing by me, talking about, is dollar yen going to catch up with the government bond yields? And I felt that there was probably an opportunity for it to do that, but we also had to understand the circumstances of why bond yields have gone in the first place. Okay, so just to kind of bring back that point, let me just show you what I mean when I say usually you have a market that these two markets correlate really well together, right? So on the purple line is US dollar, Japanese yen. Actually, you know what I'm going to do? I'm going to put these as candlestick charts, because line charts can sometimes be a little bit harder to see. So what you typically see, and I'll just zoom out a little bit, is that the US 10-year yield, right, which is the blue and black candlestick chart, usually kind of goes first, and then dollar yen can follow behind it. Okay, not all the time, but most of the time, except for a couple of conditions. This one here, for instance, we can see that they're actually not following a similar path right now. So why is that? And that's because China is dumping government bonds, which is pushing yields higher. That's the way they're kind of dealing with this trade war at the moment, is they are dumping those bonds. So that's why you've got this kind of real weird kind of decoupling here. It has happened in the past. Obviously, there was a situation here where dollar yen was rallying, but US 10-year bond yields were falling. And then all of a sudden we had that kind of catch up in price. And that was back in July. This was the intervention by the Bank of Japan, which caused that sort of yen strength to flow into the market, right? We've got this kind of similar situation now. So is dollar yen going to catch up at some point? Now, I don't know whether it will or not. The reason, I think, is because the situation here isn't normal, right? The situation that we've got right now is not normal. So I don't think we'll see that typical rally in line with what we're seeing here on bond yields right now. So I'm not relying necessarily on the correlation here at the moment for dollar yen, because of the obviously outlines that we've just talked about in terms of the risk that is posed by Donald Trump and the fact that he just announced the pause in the market. Good afternoon, Vincent. Hope you're well. Did some trading and the trade started going against me, so I just came out with small losses. Nice, right, guy? Yeah. I've not had a great trading week so far, I must admit. Like I said, I was short Aussie yen. That one got stopped out after Trump basically changed his mind on tariffs. I thought that because Aussie yen is a really great risk parameter market, and I felt that risk, although the volatility index was coming in lower, which I should have foreseen really, I did like this kind of trend continuation move. So I ended up getting short in and around here. Looking back, obviously that would have been a nice area to take some profits off, but Trump announced the pause in tariffs, and that was the candle which knocked me out of the trade here. Interestingly enough, though, we do have this little consolidation, and if the market sentiment remains the same, you know, we could see some buying coming in up from these kind of 89, 90s up towards that $92 on Aussie yen. So, you know, if you're looking at sort of the range here, you know, let's see if there's kind of some changes of trend on these lower time frames. We can see that the market is kind of squeezing at the moment. So if we were to squeeze out of that, you know, we could see potentially some upside in Aussie yen in the very, very near term anyway. But yeah, you know, essentially there's just this huge sort of volatility around in the market. You know, the VIX actually is climbing higher again, but, you know, like we've said before, usually when we get these sharp rises in the VIX, it can start to come down. That's usually positive stock markets, positive risk assets, and that's what we had yesterday. It was just an unexpected event which took the market lower. So yeah, we shall see how this plays out going into the US Open. I'd be interested to see if the US still find that notion of volatility to the downside, because arguably you could look at, you know, VIX coming in lower, again, risk assets moving higher, so things like stock markets and stuff could continue their path higher. You know, you got the S&P 500, which is down 2% today, but if you look at the grand scheme of things, it was up like 10% yesterday, I'm pretty sure. Well, 13%. And I don't think I've seen a move like that in a very, very long time. Let me go. I mean, even in 2020, I don't think we necessarily had a 13% rebound. No, that was a 10.4% rebound. Maybe 2020. Yeah, 2016. That would have been definitely. So it's been a long time since we've seen a ridiculous like rebound on the stock market like that. But, you know, the market is definitely in that sort of risk on environment again right now. Whether that lasts or not is another question, because it's hard to say if it is going to last or not. So that's really interesting. Just to kind of look into data that we've had today, like I said, CPI came in lower, unemployment claims came in a little bit higher, touch higher, but nothing that's going to kind of change the narrative there around inflation and stuff. I mean, we had the FOMC meeting minutes yesterday, and I don't think the market batted an eyelid. So it just tells you that the market is all about tariffs at the moment. So we have to keep one eye open on what's going on the tariff situation. Let's go on to sort of markets then, you know, and things that we want to have a little look at in terms of currency strength and weakness and whatnot. Like I said, I am in 3 positions at the moment. I am currently long EURUSD, I am long silver, and I am short oil. Okay, now oil short for me is a bit of a hedge move right now, just trying to hedge that kind of potential risk in the market. Oil reacts very well to risk, right? So if we go take a look at oil prices right now, why am I, you know, short this market? Well, essentially, we have a bearish market here. We have a bearish trend, okay? Ideally, I would like to be short around $67 because that's where our daily 50 moving average is. It's where that kind of previous area of resistance is. So in an ideal world, I would have liked to have seen price up at 67. It might still get there. So I'll have to wait and see before looking for that continuation. But why do I want to be short oil? Well, there's some kind of mitigating factors to this. And if I just grab that again, on Friday, right, we actually had OPEC plus increase production. Okay. So when OPEC increased production, we actually had this breakout of this $67 area, and the markets, you know, continued. Now, what happens when OPEC increased production is that there's a more supply of oil in the market. Okay, so let me just change the view here so you can see a bit of an increase there. So if there is more oil in the market, then typically we would see lower oil prices because it's about supply and demand, right? This was when Trump came in and talked about, let me just grab that again. I'm gonna make that get rid of that one. I don't like that one anymore. Let's get rid of that one as well. So on the 20th, this was Trump. Drill, baby, drill. Situation, right? And you can see the market has continued to push lower from that. And then we had that increase in production of oil. This was Liberation Day here. Okay. It's good to map these things out sometimes just to show you that the market can be, you know, fundamentally driven, right? OPEC announces decision. So what we had here was, you know, what's changed. So basically the question I asked myself, what has actually changed in terms of oil? Nothing really. The only thing that changed was the fact that sentiment had changed. We're still going to see the US produce more oil. We're still going to see OPEC produce more oil. So, you know, right. So that's why we had this reaction yesterday. So I still feel oil prices could come in lower. Yes, I might be a little bit early here, shorting around these highs, but at the same time, I had a setup. So basically, market came higher. We were in that pullback phase. We came up into this resistance, previous resistance highs, and then the market formed that break in trend. So I am short on that break in trend at the moment, which is here. My stop loss is currently at 64.78. Okay, so 64. Let's just put that in. 64.78. Okay, and my target is around about $50. Okay. So that's my current position in the market. I've only gone with a 0.25% risk because remember, with lots of volatility around. Now, there's a difference between volatility and volume, okay? So volatility is sort of price fluctuation, right? So the measure of that price fluctuation. Volume is the amount of contracts being traded or the amount of buying and selling going on in a market, right? So there's a lot of sort of volatility. There is a lot of volume around as well, but this is the situation that we're in. Volatility is producing these kind of big price swings, right, in the market, whereas a lot of buying and selling doesn't, you know, it doesn't matter if it ranges or kind of trends at that point. But we're just having these big swings. But to me, you know, there's not a huge difference in kind of the sentiment in oil, so I still like the idea of short oil. So I've had a setup, I've taken it. You know, I looked at the 4-hour chart as well, and I said to myself, has the 4-hour technically changed trend here? No. Okay, the market is still creating that kind of pattern. Yes, it was a bit of a blown out candle, but have I made a new high on my 4-hour chart yet? No. So I'm still happy to be on the downside of these oil markets right now. So that's where I'm at. That's where I'm at with oil at the moment. You can see some have come in. I've entered dollar Swiss long. H1 bullish divergence. Waiting to see how things go. I mean, yeah, I like lower dollar. So personally, I don't know if I'm a big fan of that, Vincent, but at the same time, I know where we are in terms of support and resistance. This is a big support level at that 83.80s. So, do you really want to sell there? No. So, I get why you're looking at that potential long into this. That little double bottom there looks good. I'm guessing it's the bullish divergence as well. I can't see divergence on my stochastic, but I can see it here, right? So divergence forms when you have the lower low, lower high on the stochastic, and obviously that, if you caught that move there, brilliant. I don't see it here for me right now. Technically, we have a lower low and a lower low on the stochastic if I take that low into consideration. So just for me, I don't necessarily have that right now, but doesn't mean that price can't move back to the upside. Obviously, if I was short this market up here, that is a great place to take profits. So looking to see if there's a break up higher here makes a lot of sense. Irfan, good afternoon to you. I'm looking long EJ 161. Oof, yeah. I like the idea of buying euro. I'm actually long euro CAD right now from these lows at 154. That was the currency strength meter though. So you can see euro CAD was on the list. And we had this really nice double bottom shaping up. Actually took this a little bit lower. You can see this market kind of breaking down, starts to break out. And I actually got long on this candlestick here at 8:30. So the market is moving higher for me pretty nicely here. We're in a bit of a range as well on that time frame. But yeah, let's go check out EJ. I don't know about this one personally. It's a bit choppy, isn't it? A bit choppy. As soon as I moved out to this weekly chart and I saw this chop, I was like, yeah, I want to be short from highs, buy from lows, in a range. Daily's trading above the 50 moving average though. I do like the idea of buying euros. I just don't know whether I like the idea of selling Japanese yen in these market conditions. I mean, look at that fluctuation that we've had in price. But I mean, if you've got a strategy, play to your strategy at the same time. Long at 161, targeting 162. Okay, so I guess that's a very short-term play. If you're long at 161, targeting 162, up at these swing highs there. Yeah, okay, I can see that. Good afternoon, Innocent. Hope you're doing well. You're doing well. Like you set up on oil, I was watching Nat Gas where a similar setup was developing. Missed the entry though. Might get involved if it gets a bit higher. Yeah, I've not actually looked at natural gas, to be honest. It might be a smart move to look at Nat Gas in these conditions. I mean, we did have a COT short position around here somewhere. I can't remember where it was. Let's go to the futures market. I think here, this was that red line there. That was our COT short signal. Price made a new high. Really, actually, we had a nice little bit of divergence here as well, right? Price made a new high. We had a lower high on the stochastic, and then we've had that kind of continuation to the downside here right now. But yeah, I kind of like oil prices, nat gas prices coming in a bit lower makes sense as well. What else am I in? Oh, EuroCAD I've explained a little bit. Oh yeah, I've got long silver. So that kind of brings me on to your comment here, Krishna, about gold. Look, gold is doing well again, isn't it? Market, we're trading in this kind of bullish trend that we had, this kind of bullish channel that the market was moving on. And that uncertainty saw a lot of selling in the market, okay? And then we've had buyers step back in at this point. Lovely little consolidation breakout to the upside. I don't know if we talked about that on Tuesday, to be honest. But this market has now rallied higher. And, you know, I look at this and I say to myself, sometimes, you know, I look at it and just go, where's the correlation? You know, where are the correlated markets that could kind of go with gold? And obviously silver has a 92.5% point something % correlation with the price of gold. So I always look at it and say, well, you know, I might have missed this move here on gold, but could I try and get in it elsewhere? So this is why I've got involved with silver, because silver has dropped like 7% versus gold's kind of, you know, I don't even know what that drop was. We're on a daily chart, so it might be about 7%, around 5%, but silver did like a about 13% drop in the end. So I still like the idea of being long silver. So I'm looking actively to be long silver. I mean, look at the correlation between the two. You know, usually gold goes first, then silver follows along with it. We've had this huge kind of devaluation in silver. That's made it a lot cheaper, right? It's made it a lot cheaper. So I still feel like if you're invested in gold, why wouldn't you put some aside into silver as well, being the cheaper commodity? So I like silver longs. Just to kind of go through that, price did change trend here. Okay, so this is what I'm in on. We talked about this on Tuesday. I think this consolidation, we broke out of it, we held above it. So all I've been looking to do is try and trade the pullback here. So I've actually just bought the dip, right? This little dip that came in, I just bought it. I've used a very low risk to do this, and my stop loss is below this low. So I'm looking at the sort of a bit of a longer term play in silver. Essentially, I've bought this kind of daily candlestick, right? And we were pulling back today, so I bought into it, put my stop loss below this swing low at 28.22, and I'm looking to see if we can get back up into the 34.50s. So I'll see how that one kind of plays out. I'm willing to kind of hold this. If it breaks this candlestick low, I'll probably exit early and see if we get another setup. But at the same time, I'm happy to be long silver here. I think we could probably see some extra upside in this market if it follows that kind of flows, you know. Hi, Tony. Completely agree. Swiss franc has become the safe haven. How do we know this? Look at Swiss yen, right? Look at Swiss yen. Market has been moving higher here, so Swiss is definitely being favoured over the Japanese yen in terms of safe havens right now. Why is that? Well, it's probably because of the lower risk in Swiss franc right now in terms of interest rates. They actually have a very, very low interest rate. So if you've got to think about it, what have Swiss been doing? They've been cutting interest rates aggressively. Bank of Japan are coming out saying that they're going to potentially hike rates. And in times of uncertainty, you know, do they want to be in a currency that has a little bit less volatility going on right now? So I understand why we're seeing those flows into Swiss franc at the moment. If gold is at resistance and come down, won't silver come down, or will people move money over to silver? Yeah, great question. Possibly, you know, possibly if we start to see some selling in here as well, we might see some outflows of silver too. But we haven't really seen silver go with gold. I mean, gold's pretty much back at the all-time highs again, but silver hasn't gone with it. So there can be a bit of a delay. So even if gold starts pushing lower, silver might still break higher a little bit. Gold-silver ratio is still very high. Still very high. Broke above that 101, which were these highs back here in 2020. So, I mean, if this still pumps higher, I'd still be more inclined to be a buyer of silver, to be honest. And like I said, I've gone in at a very, very low risk. So even if this turns around and takes me out, I'm not going to be that bothered because I've risked less than 0.25% on this move. So I'm just trying to see if we do start to go, then I've got in at where I want to kind of get in at. And I can always add to it if it starts really doing what I want it to do. You know, if we start getting this kind of trend scenarios going on. Let's see how other risk markets are doing then. And the ultimate risk asset, believe it or not, is cryptos. So let's have a little look at how Bitcoin reacted yesterday. We had this little sort of significant rally again. Obviously, the market felt that it wanted to kind of close this gap for one, but for two, it was risk on, right? And this is the ultimate risk asset. I have been selling Bitcoin on rallies. I actually sold here down to these lows, took profit. I sold up here, I believe, as well. Took profit as well down here. So Bitcoin has been pretty good to me on the short side. Again, I don't really see the fascination in buying this. I have put a little trend line in there to see, you know, what if the momentum, you know, does in fact go, and we see Bitcoin prices back up towards 88. I think if I was up at 88, I would want to sell Bitcoin. Again, let's look at the facts. Do we still have a risk on environment? I don't think we do. I don't think we do. The VIX is still technically high, even though it is pulling back. And this narrative here, I don't think's over, right? Let's just get... I don't know if there's been a response from China. Does anybody know? I haven't actually seen that. Yeah. Let's have a quick look. I haven't seen anything. So if anyone else has seen anything, say if China has responded, give me a shout. Because I haven't looked. Usually I go on to Forex live every morning and have a little look. I mean, I haven't seen anything. I haven't seen anything. They did respond. They have responded. Okay. Oh, right. Okay, I can see that now. China says its position on trade is clear and consistent. The door is open to dialogue, but it must be on the basis of mutual respect. Okay, moves at the US, well, that's in the spirit to cooperate. So it actually looks like we are going to get that cooperation there. Okay, that's obviously better than anything, really, isn't it? So maybe volatility will start to come lower. I wonder that's why we're seeing a little bit of bullishness across sort of the Aussie dollar. You know, we traded below this 61.50 handle, you know, and now we're back above it, right? Market is kind of trading above that. So let's see. I mean, that being said, though, you've obviously seen that bonds have been sold off still aggressively, and then you've got gold still moving higher. So there is still some air of flows there from safe haven or into safe havens. Interesting. I actually didn't see any of that this morning. I mean, he's saying the right language now, isn't he? He started to say that Xi is a smart guy, will end up making a very good deal. Talking about an iPhone costing $7,000. Funny. Interesting. Why are you long Euro CADs? Yeah, sorry. I'm long Euro CAD because of the strength meter. Okay, so Euro remained +3. It's not the only reason, obviously, but you know, one of the reasons was because of the currency strength meter. I've used this for years, something that I do every week. You've probably seen it before, but basically Euro stayed +3 and CAD moved from +5 to +1. So it's telling me that over the past couple of weeks, the Canadian dollar has got weaker. Euro has remained at a fairly high level in terms of currency strength. You know, if I look at the actual strength meter here, what we can see is that Euro is the blue line, and we have CAD, which is the green line. So Euro is here and CAD is here. Okay, CAD was very strong, was getting strong, hit that +5, which is very strong / reversal, and it went down to +1, whereas Euro also was very strong, but it's just kind of holding at these kind of areas. Swiss franc is the strongest, that's the pink. Next is the Japanese yen, right? And then the lower currencies we've got is US dollar, Great British pound is here, the New Zealand dollar, as well as the grey Oz, which is flat. But I imagine that this week will be up here for Aussie going into next week. But yeah, so what this is kind of just telling me is that Euro is a fairly strong currency, CAD is a weaker one. And to be honest, I looked across the charts this morning and I was like, where is the sort of better trading opportunity? And I had a lot of alerts set. There was a lot, you know, I almost took Aussie Swiss short, but when I looked at Euro CAD, what I liked about this was the fact that we were at this low. Okay, so the market kind of found support in and around these areas here. Oops, don't change the color. In and around these areas like that, and we've got this kind of almost like a bit of a range going on. So my thought process was, I'm at the bottom of the range, currency strength meter is a buy. I like the idea of this. If we think about tariffs as well, he's pretty sure he's paused the tariffs on Europe, apart from the 10% one, which is across everyone, but he's kept the tariffs on Canada. So, you know, that could also be fairly negative Canadian dollars right now. Also, think about oil prices. I want to see oil prices lower. Oil prices have been lower. That could impact CAD on a weak side, because they are a exporting nation. So we could see that move. If you want a true sort of oil trade, you want to look at CAD yen, right? CAD are big exporters of oil. Japan are huge importers of oil. Japan imports pretty much all of their oil. So as prices go down, it's positive for the Japanese yen, negative for the Canadian dollar. So if you want like if you don't want to trade oil directly and you want a currency pair that could possibly, you know, help with that, then CAD yen could be one of those to look out for. The only thing you've got to mitigate as well is the fact that you've got, you know, oil's not just the biggest thing here. You've got obviously the Canadian economy and the Japanese economy, and Japan's economy is doing fairly well, but it's also used as a risk asset. That's why we've seen this move here. But yeah, CAD yen's a very good one if you want to look at sort of downside. I mean, look at this here. Let me just grab, let me delete all these drawings. These are old drawings. Let me just go to oil. Pin that on the new scale there. I mean, look at that correlation, right? Oil prices start dipping, CAD yen goes with it, right? Oil prices start rising, CAD yen starts rising. Oil prices dip, CAD yen dips. So I'm looking at kind of everything in terms of what have oil prices done recently? What do I think about oil prices? You know, I think oil prices could continue lower because of the production that's been going on by OPEC. which will and the US, which will drive oil prices lower. If we think about oil exporting countries, you've got the US, you've got Canada, Norway as well. Although Norway's economy is doing really well at the moment. So although if you look at dollar NOK right now, that also sold off quite aggressively. And I was looking at shorting dollar NOK through here because Norway's economy is doing fantastic. And that could be a good selling opportunity, to be honest. Because the price of that has just got very interesting. Now thought that out loud, I might keep an eye on that. So yeah, basically, Dan, there was a lot of factors to suggest that EURUSD could potentially move higher. There was this double bottom here. I don't know if there was any divergence. Wasn't any divergence there, but basically got long on this candlestick here, and price is moving nicely at the moment. I don't think I went into drawdown on this one. It's actually moved quite nice. But again, I've only risked very small on this, less than 0.5% on this one, just again to kind of mitigate any kind of aggressive movement in the market. Okay, so we'll see how that one plays out too. My target is just the highs here. We do have this area here of volume where there's that kind of consolidation period. So that could be an area of volume which could see sellers come in, but we could see this price move up into the 157.50s. Obviously, we've also seen not ECB, but the is it the Commission, the EU Commission, come out and say that they're willing to open negotiations with Donald Trump. They actually applied extra tariffs and then now have kind of gone back on that. I want to open negotiations, so that could be fairly positive as well. Obviously, you've got the stimulus throughout Europe, and if you look at sort of EU bonds that we've seen recently, we had a nice little jump up in the EU bonds and the 10-year bonds as well. So yeah, we'll see what happens here. But I do like EURUSD. I mean, look at euro dollar heading up into 112 now. I haven't actually traded any of the major pairs recently. I did like the idea of getting short cable. I like the idea of shorting pound, but I haven't seen any setup yet. You know, we've got this upward trend on the 4-hour time frame. Prices breaking higher, dollar's weaker. If I want to short the pound, I should have shorted pound yen at 194.50 when we talked about it, because that would have been a fantastic move. Although the hourly is starting to break below that 50 MA, so might get an opportunity to sell pound yen. I might see if we push back up into these highs, because I do like the idea of selling pound yen. The UK economy, you know, what's happened in the UK recently, which has kind of gone a little bit under the radar. In April, the new tax system came in, and basically we've had an increase in tax, which is not very good if you are a UK citizen like myself. But at the same time, what does it do? It reduces money in people's pockets. You know, we've got energy bills going up, which is also going to be restrictive. So growth in the UK and growth forecasts in the UK are very, very low. So yeah, I think for the UK right now, we'll probably see some further downside to the pound at the moment. And you want to try and take advantage of that against stronger currencies. Japanese yen is one, Swiss franc's another. You know, got this nice little breakout here on Swiss franc. It's just coming into these volume levels now. So this is yesterday's volume. So we'll see if we get a reaction here or if we come down into these swing lows. But yeah, I do like pound short. I didn't get short at 194.50 though, which looking back seems to be a bit of a stupid move by myself. But we shall see. So we've had about 20 minutes of the open right now, and stocks haven't continued their climb yet. They haven't continued the climb yet. Is there any more data out for the rest of the day? I don't think there is. Got a few FOMC members speaking. We do have the 30-year bond auction as well. 10-year bond auction yesterday was quite good for the US. So that was mentioned yesterday. So it'd be interesting to see how the 30-year bond auction goes. And then tomorrow we've got PPI and consumer sentiment. So, how do you see Aussie Kiwi longs? Great question. Honestly, I did a blog post about Aussie. Would the Aussie ever be bullish again? And then obviously that pause happened and the market rallied. So if you want to know anything, when I say the Australian dollar is bearish, it is bullish. Just do the opposite of what I say when it comes to the Australian dollar, I feel like. But no, all jokes aside, I think Aussie will obviously respond very well to any kind of deal between China and Australia, between China and the United States, sorry, because Australia's biggest trading partner is China. They also do a lot of trade with the US. But honestly, they have a deficit with the US, you know, so I don't know why President Trump would necessarily tariff Australia. I think it's just because they trade with China. So we had that kind of situation going on. But yeah, I think Aussie will respond to positive news from China. We do have to think about what the RBA are considering, though, at the moment. The RBA are considering cutting rates now. As long as inflation can continue to come in target levels. So let's see how that one works out. RBNZ are also looking to cut rates aggressively again because inflation is comfortably between the 1 to 3% target range for them. So the chances that the RBNZ would cut again are quite high as well. But I don't think that's not really impacting the markets at the moment. You know, we kind of have to ignore the macro and stick on the side of what's going on in terms of trade tariffs. My Euro Kiwi alert just went off. That must mean it's breaking highs. So yeah, again, look, you know, Euro Kiwi starting to break higher. That's also a trade that's on the currency strength meter this week. If we go take a look at it, you know, saying that Euro's a stronger currency, Kiwi's getting weaker. So just from a currency strength and weakness point of view, it's saying that I should be long this market. And you can see that we're starting to see that like transition on the head and shoulders there. So if we were to get a close above the 50, that would usually be typically me going long on this market. But the problem is I've got 3 trades open at the moment. Yes, they're all at 0.25%, but that means that I've got 0.75% risk on at the moment. So I'll see if I want to add any further risk in at this kind of current moment in time. You know, would I be comfortable taking a 1% loss? I have to wait and see, maybe. Not too bothered just yet. So we'll see. Maybe Euro Kiwi can start popping a little bit higher as well. But yeah, I mean, still that little bit of air. I think at the moment, you know, the best thing to do is probably just stay cash. You know, I've got involved with the markets again this week, and it hasn't been too successful for me so far. Hasn't been bad either, but at the same time, it's not been that successful. So, you know, we'll see how a few of these trades play out and pan out over the next couple of days. Just watching gold and silver because gold is starting to just reject those highs a little bit. Just have a little look. Starting to reject this little high here. Bit of divergence going on there in those highs. So we shall see what happens in that market. All right then, guys. I'm probably going to leave it there. We've been going for about 56 minutes. Usually I like to run these for about an hour or so. So yeah, I'm going to leave it there. Thank you for everybody that joined me again this week. We'll go again next week, Tuesday, Thursday, and then the week after that, as well as the week after that. So we've actually got, yeah. I was trying to think of if this month fell on a different one, but we've got 1, 2, 3, 4, 5. We've got 6 streams before the end of the month. All right. So thank you all. I will catch you all very, very soon, and enjoy your weekends. Again, if you don't want to risk anything in the markets at the moment, I think that's absolutely fine. And if you do, just keep that risk super low. All right. Fight another day. All right. So thanks for watching, guys. Speak to you soon.